If I was just getting started with trading and I only had $25,000, here's exactly what I would do. Yo, what's going on, Premium Chasers? I hope you're having a God-blessed day today. Every single person that comments down below is going to get our small account checklist, okay? This is a fantastic resource for those of you that have smaller accounts, but you want to get into this cool option selling game. Just drop a comment. I will personally send that over to you. And while you're down there, hit that like button, hit that subscribe button. But what we're talking about here today, guys, is what I would be doing if I was just starting out and I only had like a 25K portfolio. Now, first and foremost, obviously, nothing here is about copying trades. That's not what this channel is about. Everything here is educational content. Just because I like certain stocks doesn't mean you should too. So always go do your own due diligence. But with that said, I'm going to show you a couple of my favorite stocks and how I would allocate my portfolio if I had only 25,000. So let's go over the shoulder. So the first one that I would love is Pepsi. Okay, why? Right? Well, number one, I'm a big believer and I'm very bullish on Pepsi, and it's getting absolutely beat up today, and really has been for the past month or two. Right now, it's trading at 130. So the first thing I would be doing with my 25,000 is eyeing something that is something I believe in, right? And number two, something that's getting beat up, right? And the reason I'm looking for something that's getting beat up is because I want to deploy my capital, right? I want to deploy that capital into a stock that I'm bullish on, that I believe is at a great price. So for me, that's Pepsi right now. See, right here, I have my 200-day moving average line right here, and you could see it's 158, and the current share price of Pepsi is 130. Now, we have no idea if Pepsi will ever cross back into past 158 or 160 or hit its all-time highs again. We don't know that. Nobody knows that. But being bullish, I do personally believe that. I also have overlaid here my Bollinger Bands. Right? These Bollinger Bands basically give you an area at which a stock is most likely to trade. And you could see we usually hit the top of the Bollinger Band and retract. We hit the bottom and then we retract. Now, sometimes we go well below it, right? But we usually retract, okay? So the best time what I'm about to show you to do what I'm about to do is when a stock is getting beat up and trading towards this bottom Bollinger Band. So let's head over to our Robinhood. I'm just here on Pepsi here, and I'm going to go to the trade options section, and I'm going to click sell a put. All right, now I'm going to select my expiration date of 31 days. Basically, what I'm saying here is I'm willing to buy 100 shares of Pepsi in 31 days from now for a price that I choose and collect a premium from an options buyer on the other end. Let me show you what I mean. So right now, obviously, it's trading it at 130, right? You can obviously go out there and buy your shares like a normal person, right? But that's not what we do here as option sellers, okay? What we want to do is get it at a better price. Now, this is largely personal, so whatever works for you. Like, let's say you genuinely were like, you know what, if it hits 125, I'm fine buying it. I'm totally cool buying those 100 shares. Some of you might be like, you know what, I even love it at 130, but you know what, I'd rather get paid a premium up front, right, instead of just buying it outright. So let me show you what I mean. So let's say 120, right? We like the 125s right here. Well, for the 125s, we would collect $147 in premium. This premium is coming from an options buyer, right? We are an options seller, right? So we would collect $147 in premium. So I like to put this into my cash secured put calculator. Obviously, these premiums are always changing, so disclaimer here, right? These are constantly changing numbers. Just what I'm showing here is for example and educational purposes only. I'm going to put 147 premium right here. Now, your brokerage isn't just going to let you say you're willing to buy 100 shares of Pepsi, but you can't do it, but you can't afford it, right? So what we can actually do here is we have to put up at least $12,500, right? We have a budget of around 25K, right, that we're working with. So that would lock up 12,500 of our dollars, right? And you could see our premium return here is 1.18% in a 31-day period. Annualized, that's a 13.85. Now, this is where I kind of just start looking, right? I'm just organizing my thoughts here, and then we're going to dive into a couple other things as well. So I have about half of my 25K already going to be wrapped up here, right? So I'm just going to copy this real quick and put it right here. Now, when I'm thinking about like portfolios and how I allocate it. Every one of us has to do it for ourselves, right? We all have different places in our lives. We have different risk tolerance levels. But how I like to structure things is I kind of go safer and then something a little bit more risky, but also offers a fantastic premium, right? And I also have to consider what kind of premium return on collateral, right? That's like your ROI, right? Am I aiming for in a monthly? Is it like a conservative like 1%, or am I going for like the riskier stuff that's 4, 5, 6%, right? So you got to weigh those kind of risks for yourself, right? So the next stock that I'm very bullish on long term is Nvidia. I'm a big fan of Nvidia. Also been getting pretty beat up and far off its all-time highs. We'll head over to the chart here, right? And we could see our 200-day moving average is 125, and Nvidia is trading at 112 right now. It's actually above this middle Bollinger Band area. However, we're still going to go and take a look at the options chain. It's not a perfect setup to do cash secured puts, but if you love the company, right, and you're bullish on it, there's really not a bad time to sell puts, right? If you want to buy 100 shares of it, right, you can either just go buy the 100 shares like normal people do, or you can collect some of that premium and maybe buy the shares at a price you want. I don't know. I prefer the latter, right? So let's go over to back to Robinhood. We're just going to type in Nvidia here, right? And we're going to go to that trade options section again. We're going to click sell a put. And we're just going to go out 31 days. I like to be around 30 to 45 days out. And the reason for that is, number one, you get a much better premium return, right? And two, you get a better strike, right? I guess you could look at it as strike to premium return if you want to. You can do these things on a weekly basis, but it does require a lot more management, right? So that's, again, whatever your kind of a trader style is. Me personally, I like doing things 30 to 45 days out, so I don't have to necessarily be glued to my screen every single day, right? That's not a strategy. Unfortunately, I'm definitely not smart enough to be a day trader, like a real day trader, like drawing on sticks and crazy technical analysis. I think that's all BS, honestly. I think nobody knows, no tool, nothing knows what the market's going to be doing. But the reason I like this strategy is because I get to essentially buy stocks at a discount and get paid some premium up front, just saying maybe I would. And it just works for me. So right now, obviously, Nvidia is trading at 113, right? So what I'm looking for here is like a little bit more of a riskier play. Now, Nvidia is very volatile, so it is essentially a riskier play. So let's go look at the 100s, right? So we'll just it's just for simplicity, right? We'll look at the hundreds here. For the hundreds, we would actually collect $228 in premium from the options buyer. And I'm just going to put this in my second column right here. Now, our collateral would be 100 shares times $100 per share, right? So that is $10,000 right here that we would be putting in, and we'd see our return here is a 2.28%, right? So now we are just at our, $25,000. We're at $22,500 used, right? And we're getting, on one trade we're getting a 2.28% return, and on another one we're getting a 1.18% return. Now, to kind of go full circle before talk a little bit more here, is there's a few things that can happen when you are selling a cash secured put. Number one, like for example, Nvidia, if in 31 days it hits $100, it hits $90, you are on the hook to buy the 100 shares at $100. Okay, so you got to be comfortable with owning the company. That's why I say it's good to do this on stocks you actually love and you actually believe in. Okay, the second thing that can happen is that the stock will stay above the strike price that you selected in your contract. So what does that mean? Well, that means it stays above $100, right? It's trading at like 105 or just sideways. Your contract will expire worthless, meaning your collateral will be returned back to you, right? And then you can use your $10,000, right? That it has, because the contracts expire worthless, to run the play again or move on to a different opportunity, right? But essentially, your collateral is locked up during that period. Now, you can close out your positions early. You can roll your positions. There's a lot more advanced strategies and stuff like that you can do with this strategy. Okay, so what's the balance? Like, what kind of balance should you be aiming for? Well, number one, as I said, you have to figure that out for yourself and where you are at in your life. For me personally, if I'm looking at this, I'm like, you know what? I think I'd like to be a little bit more aggressive, right? I would like to be a little bit more aggressive on my Pepsi. Why? Well, if I head over to Pepsi right here, right? I'll go back to the chart. I can see that, the last time Pepsi was like 125 is a very low. Definitely not in the last, not in the last 5 years here has Pepsi been at 125, right? So for me, I'm like, you know what? It's really most likely not going to happen. So I might be a little bit more aggressive with that. So I would come back here to my actual options chain, right? And I would start looking at maybe some strikes that are a little bit more aggressive, okay? So I'll go sell a put and I'll go back to my chain here and I'll start looking at maybe, hey, you know what? Maybe these 127s, right? It seems 129 that was a pretty big like support level, or maybe even like the 128s or 127. Now, kind of a quick and dirty way you could see your percentage chance of assignment is your delta. Now, it's not the technical way to look at delta, but for us as option sellers, it's good enough. For me, good enough is fine, okay? So if you open up your contract, you'll see this delta, and you can see if this one is a 0.32, which basically means there's about a 30% chance that Pepsi will drop to 127 and I will have to buy those shares. However, there's a 70% chance that the contract will expire worthless, meaning Pepsi will stay above 127. It'll simply expire worthless. My collateral will be freed up to you. I usually like to be in those 20 to 30 delta. So this one right here, I'm like, you know what? I like this, and I would actually collect a lot more premium. I would collect $215, but with that, right, I'm going to put 215 here. I am now saying I'm wanting to buy it at 127 instead of a 125. So we simply just change, right, our one number here. We're putting up essentially $200 more in our collateral, right? And now we're seeing a little bit of a better return on our money, and especially for a company that we like. Now, the more riskier stuff you go into, the better the premiums will be. Let's kind of dive into one of those examples, because here on the channel, I like to just focus on like, I know like the boring stuff, but I know some of you really love to like do like Palantir, for example. So let me show you an example, right, of a very volatile company and how a lot of people will be burned by it. So if we look at the chart here, and we could see Palantir is down 13% today after a pretty decent earnings report. And you could see, obviously, this is a very big growth stock, right? And a lot of people the other day before earnings started doing, some like selling puts on it and stuff like that, which is, that is your own decision, right? But for me, I didn't think that was a good move. But for example, let's just say you want to get into Palantir today because it's, it's dropping like a ton of bricks. Well, let's kind of show you what kind of returns those are, so you can compare it to like the more kind of like, boring kind of stocks. I'm not saying Nvidia is boring, but like Pepsi kind of is. All right. So I'm going to go to PLTR here, and I'm going to go over to the trade option sections. We'll click sell a put, and we'll go over to our 31 days expiration, and we will take a look at these premiums. Now you can see these are a lot nicer, if you ask me, right? Like, look at this one for the hundreds. For if you're willing to buy the 100 Palantir in 31 days, you'd be collecting $450 in premium. So if we go take a look at what that looks like, so 450, right, on your 10 grand, you're getting 4.5% return, right? And of course, if you really wanted to, spread out your 25,000, you could buy 2 contracts of this. I have this little area here as well, and all these contracts are free. By the way, I forgot to mention that they're free inside of our Facebook group. All the content here is obviously free unless you want to work one-on-one together. That link will be down below in the description to our Facebook group. So join us. It is a vibe in there. You can post your questions, all that good stuff. But you'd collect, essentially, if you did 2 contracts, you'd collect $900 in collateral here. But rule of thumb, okay? Always do this on stocks that you don't mind owning. I can't stress this enough. I see a lot of you, especially that like post up in the group, right? And you're getting into a lot of these companies that I don't honestly think you have an idea about their business model, or you don't even understand the company at all. And the only reason you're investing in it is because some guy on YouTube told you about it. And all the YouTubers are talking about it. You could see that with like Palantir. You can open up your X, you can open up YouTube. Everybody's talking about it, which is creating a lot of hype. I am very bullish on Palantir long term, but with the current hype around it and the PE ratio, I believe it's extremely overvalued companies, and obviously a lot of investors think the same. Guys, don't forget, drop a comment down below, and you're going to get our small account starter kit ebook. Every single person will get that. It's going to document a lot more of this process in more depth for you. Specifically, if you have a smaller account, I'll personally reply. Make sure to hit the like button, that subscribe button, and also if you are somebody that's interested in a more hands-on approach with me personally in a one-on-one setting, make sure to take a look at the link in the description and check out our option selling incubator. It's a 1-year-long program, so you can really set this kind of thing up for yourself. And I do usually say it does take about a year because, as you see, we really don't trade a lot, guys. I hope you have a fantastic day. Remember, sell options, collect premiums, repeat. I will see y'all tomorrow.